All right, everyone. I'm going to go ahead and do it. I'm going to discuss a little bit of my trading strategy to show my support to all of those who have supported me this year, and hopefully we can all make some money. Now, let's go ahead and get into it. Now, some of the things I've learned this year and researched, I'm sure most of you are aware, is a very, very, very long list of things. I'm not going to read these off. The point I'm trying to make is I have looked into several different areas, not only in the market, but outside of the market this year, and have spent hours and hours and hours of my time. I even, quit my main job. I used to sell cars. This is no secret. And I left that to do this full time, to study these market conditions during this year. And I've been grateful for the journey. I've learned a lot, and I've busted my ass doing so. Now, I enjoyed it, and it's been fun, but now it's time to put everything I've learned to the test and start making some moolah while we all hold our favorite stocks. So I know that I put, likely put more effort in than most other YouTubers out here. I'm almost certain in that regard. I've stayed away from TA because I feel like it's irrelevant. And yeah, I've asked a lot of questions that a lot of other people were afraid to ask. So again, this is unconventional thinking is the way to go. So putting it all together, while we're holding our beloved AMC and GME, why not make some more on the side? Members of my channel will be able to follow along as I will be sending time-stamped screenshots whenever I enter into positions during the week. If I am shorting, most likely we'll be taking positions pre-market, so unfortunately that means you'll have to wake up early in the morning, but hey, I'll be up too. This is not financial advice, and never invest what you can't afford to lose. Are we going to hit 100% of the plays? No. Will we have an exit strategy if it goes against us? Yes. But that's neither here nor there. The point is to explain the strategy, not hold your hand and tell you what stocks to buy and when to sell. You should be able to do that on your own by looking into this strategy. First and foremost, if you're a bull or a bear or an ape, stop it. It's not going to work here in this strategy. The market moves, we make money, period. I highly recommend setting up a margin account separate from your AMC and GameStop position. That way you don't have to worry about any lending going on. Margin is going to be necessary if you would like to play the short side of the market, which is a necessary side to play. The market typically moves in two directions, if not the third consolidation direction. But if it's moving up, money can be made. If it's moving down, money can be made. Shorting the market is not bad. Predatory shorting is completely different. So if you have it stuck in your head that shorting is evil, it is a necessary component of the market. And it's different when you're shorting stuff you're not paying for. We're going to be shorting stuff we pay for up front. And we are individual investors. None of that ape shit here. So this is the strategy. I'm not going to explain all of these components, but I'm going to go over a few of them just to kind of get your mind rolling on the way I think about the market. So the strategy, finding candidates. This is the process I go through when I'm looking for plays. So it focuses on these metrics primarily. Now, not all. Sometimes I go outside of this. It just depends. We'll get into that more on after we get this going a little bit. But basically, short interest, 13F reporting, news narrative that's currently in play, earnings cycle is huge, daily chart examination for gaps to be exploited is huge, MACD cycle referencing is huge, and open interest on the options chain is huge. These bottom four here are, I would never choose a play without looking at all four of these as far as related to this strategy. So let's look at an example. Grow generation. So we look at the short interest. We can see here that it has been steadily rising throughout the year. Their earnings are not bad by any means. They're a profitable company. Had some things happen throughout the year in the midst of all of this COVID and money reallocation going on. Now, fundamentally, I'm not paying too much attention to the fundamentals here. I'm just going off of the psychology based around the earnings cycles, trying to think like the institutions. So it's been going up, rising slowly. The company is expected to have earnings on November 11th of this coming week. So this is the time to take a position. You just have to figure out which side of the market you're going to be playing. Next, we look at 13F reporting. Fintel is okay for this. It's okay, but you always want to make sure. This right here, the average share price, ignore that shit. This is not provided from Sec Edgar. Fintel provides this information on their own as part of their gimmick for selling you on their subscription service. Because if you took this out, you wouldn't need Fintel. So always, always, always verify the position reporting that Fintel says if you're going to use Fintel with Sec Edgar. And to do that, it's pretty easy. We're going to use IMC Chicago as an example. You just click this little icon here, go into that, and it'll link you to the Sec website where you'll click on the information table. And then we can confirm that IMC Chicago LLC has a hedged position here, calls and puts, slightly more bullish than bearish, and he has a long position too for shares. So that is good to see. And we can verify by looking at this that Fintel was accurate this time. Okay, the earnings cycle. This is a big one. So as you can see, revenue's been consistently growing. There was a miss slightly last earnings cycle, but again, I'm not really too focused on the fundamentals here as much as the earnings cycle itself, because you'll see in a minute when we look at the chart that most of the volatility comes off of the earnings cycles. So this is one of the most important parts of the strategy. You want to examine the charts, and on the daily, weekly too, daily, weekly charts, you will want to look at examination for gaps to be exploited. So we have a couple of notable gaps here. We have one right here, and if you look down here, it's from the last earnings cycle. See, volatility increases substantially. That volume was going haywire. That would have been a nice day to short the stock. If you could have exploited that gap down, that would have been a very, very nice play. So what we're looking to do is exploit the next gap up. Now, there is a tiny gap right here, but that literally just filled after hours last Friday. You'll notice that the bottom of the top of the gap fills around 23.3. And if you look to where the stock closed after hours on Friday, it was right around there. So very, very important part of the strategy, gaps exploitation. This is the area here that we'll be trying to exploit. Now, open interest. This is how I get a week-to-week price target information. So looking at the options chain up and down, we notice one thing. By far, open interest exceeds all other strike prices at the $30 mark. We also notice that open interest is lowest at this strike price. So we have low volume, low retail interest, high institutional interest, low retail interest on puts, somewhat interesting institution interest on the put side. So we'll have to wait and see what happens. But if I had to guess, I would say anywhere between 27.5 and 29.99 would be a decent area that we could see Grodrin finish this Friday, meaning this would be a long position strategy. And that's basically it. But obviously, every situation is different. That's just the general mindset, to not get into it too much. But again, at the beginning, I'm not going to do this the whole time, but at the beginning, for the first few weeks, I will provide timestamps when I take these positions, and I will send them to the members only portion of the Discord and my YouTube channel so that you all have that information. But if you go through the charts right now and you look through earnings cycles, you will notice this setup around the market due to the lack of liquidity we have seen through the repo market this year. So it is exploitable, and that's what we're going to start doing next week. Buckle up.